Welcome back to Trading Wars. So today's video is going to be a full trading strategy looking at the advanced opening range breakout. So this is the opening range breakout strategy with my twist on it. I know a lot of you have been requesting this, so I'm very happy today to bring this full free trading strategy to you. And if you're ready, let's step into the war zone. All right. So the opening range breakout, also known as the ORB, stands for figuring out what the range of a candle or of a time frame is, and then taking the breakout of that range either to the upside or to the downside. So an example of this is we have a first 5-minute bar on the day, and we are going to take the breakout of this bar either to the upside or to the downside. So the way you actually get into these trades is by using something called stop limit orders. Okay. So this is something that people don't talk about enough, but stop limit orders are an order that only fills you. So let's use this candle as an example. If you have a stop limit order on this high, it'll only fill you when the high breaks, right? So if the price is in the middle of the candle and it hasn't broken the high yet, it will not fill you. And I use stop limit orders all the time, everyday trading, especially when it comes to my inside bars and when it comes to the orbs, right? So what you would do on a first 5-minute bar like this, you'll have an entry to go long above the high as well as an entry to go short below the low using stop limit orders. And whichever one gets filled, the other gets canceled, okay? So pretty straightforward. It's just looking at what the opening range is and then taking the breakout on either direction, okay? So the time frames that we use opening range breakouts are, for me personally, I focus specifically on the 5-minute chart for day trading, but you can also look at the 15 and the 30-minute if you want to do from a day trading perspective. Anytime you're going to the hourly or 4-hourly, that's more of a swing trade because you're most likely not going to hit targets until the next day. So what I really wanted to talk about today, though, was the advanced opening range breakout strategy. And this is something that I've just created over time and through testing and through trading in the markets every day. And what really makes opening range breakouts effective, from my experience, is who is trapped with that opening range, who is going to lose money, where are we gapping? Are we gapping outside of the previous day's range? Are we stuck inside the previous day's range? Those are the questions I ask myself before I use an ORB, okay? If we're opening inside the previous day's range, I don't want to use an ORB. So I'm going to talk to you guys about all of those specific examples. We're going to go through a ton, and then I'm going to come back to targets and trailing last, okay? So let's start off with this example. So this was today. This is Friday, December 18th. And I want to use opening range breakouts when I know that somebody is trapped at the open, because the opening range breakout only works if someone is going to be trapped such that we're going to have a stop loss flush and we're going to have a directional move, okay? So we can clearly see the day before that we are opening below the previous day's low. So anyone that was long here, wherever they were long in the previous day, right off at the open, they are losing money. And with that triggers my mind to think about the opening range breakout, because if we do start pushing through these losses, stop losses, I'm expecting a flush, and that's exactly what we happened today. So how you would take this trade is, so the first 5-minute bar, you let it close, and then we're going to have a stop limit to short and a stop limit to go long. And in this case, what happens is we break through the low, so we're triggered in short, okay? So now with your stop loss, you have a few things that you can do. You can put it above the candle, right? You can use a Fibonacci, and you can put it above the 618, right? And that will give you a better risk to reward like this. Or you can be more conservative and put it above the 786. It all depends on your personal way that you want to do it. So I'm going to leave that part up to you guys to do a little bit of testing, because here's the thing. You have to investigate, depending on what you're trading, how you want to put your stop losses, right? That's up to you. And personally, for me, when I'm trading the SPY, I like to not really risk above the high. I like to risk above the 786, because that for me has worked better to giving me better risk to reward. Okay. So, but whatever instrument you're trading, you need to do a little bit of due diligence and look at a few orbs and see what works out the best. Okay. So what we're going to do here now is once we get triggered in, you have two options. You can just set targets and forget about the trade, or you can trail aggressively. Okay. So if we're going to set targets, as I always do, I'm scaling out partials at 2. So that's 2 times my risk, a little bit more at 2.5, 3, 3.5, 4, all the way down as much as I can get. Okay. And today, the very low, it was about 5, close to 6, which is a home run, right? If you're trading with $1,000 risk unit, your last partial will be for a $6,000 profit, which is really, really good on day trading, right? So the other thing that I do is as I'm scaling out, I'm going to be moving my stop, right? And I try to move my stop in line with the fibs if I want to be conservative, okay? So as we're falling down here, I have these fibs as areas to move my stop to protect me. And what I'm doing is I'm waiting to see, okay, when we come to the 50, do we have a rejection? Yes. And if that's the case, once we start breaking down, I'll move my stop above the 50. So that's being ultra conservative, and that'll allow you to get the flush. If you want to be aggressive with your stop, you can trail every single bar on the way down, right? And if you did that, you would have been able to get out for partials for about 3R, and then your last trailing stop would have been out at about close to 1.6, which is still really, really good, right? With the 2-to-1 risk to reward, you only need to be accurate 34% of the time in the market to make money, okay? So it's, it's all comes down to risk to reward at the end of the day, and all comes down to personal preference, depending on, do you want to trail aggressively? Do you want to trail loosely? Do you want to take targets? Do you want to do all or nothing? It all depends on your personal preference. So I'm going to leave that up to you guys to decide. But for me, like I said, I would be trailing and aggressively scaling out on the way up or down. Okay. So now let's look at another example. So here's an example where so we're clearly gapping outside of the previous day's range. The first 5-minute bar is a big green bar, and then the next bar is inside of that bar. So as an example on this trade, the opening range was not broken in the second candle. So what you can do instead is then you can move your opening range to the next candle. So now your next candle will be your opening range breakout. So this area here, right? So then again, we'll put stop limits below and stop limits above, and then we'll get fill on this breakdown, and that's another easy winner, okay? And now here's an example of when we using the orb, and you have to be quick with your targets. So this is a good example of why you need to scale out. So that's one of the things I wanted to show today, right? So, okay, so we have the first 5-minute, we're gapping outside the previous day's range slightly, not too much, but slightly. We're going to enter below the short. We're going to put the stop, let's say above the 786, right? And then we're scaling, and we barely get to 1.5. We don't even get 2 here, right? So depending on how you're doing it, if you're trailing every single candle, you're going to get out here, and you're still going to make a little bit of money, which is good, and you're not going to have a loss. If you're scaling out, you might be able to take targets off at the 1.5, and then the rest of it you get trailed out for break even or however you choose. Okay, so these are all good examples of orbs, because you notice how we're opening above the range of the previous day. Here's an example when I won't use the orb. Okay, so this is the 15th of December, and here's the previous day's high, and here's the previous day's low. If you notice on this day, and I also posted this on Twitter, we're opening in the middle of the previous day's range, so the market is in balance. Essentially what's happening is no one is trapped at the open, right? If you're short, you might have had your stop up here, so you're not really trapped. If you're long down here, you're happy, but you're not up a huge amount of money, right? We're still within the range. So anytime we're within the range, I do not want to use the orb, because I'm expecting whipsaw. I'm expecting a range bound style of trading, which is moving from one extreme to the other, right? And you can clearly see here, if you take the opening range, we break out to the upside, and then quickly we turn around and just chop you out. So that's when I would not use it. And then the last example that I'm going to show here on the 5-minute is, here's another example where we gap clearly above the previous day's range. We have this first 5-minute bar hammer, And again, what we're going to do, we're going to go long above the high. And if you're following along like me, you're going to put a stop below the 786, which is about there. And we're going to be scaling out, and then we're able to get close to 3R, which is amazing. That's amazing. And then we'll just trail out and then get stopped out somewhere here on the last partial, and then we're done for the day. And we keep it that simple. Trading can be that simple. You can be an opening range breakout trader, but you need to know when to use it. And what people are not going to tell you is about the gaps and the traps and understanding the psychology of the market. That's what I'm trying to teach you today with the orb. You'll find many videos on it, but you won't find videos talking about the psychology. Okay. And then the other thing I wanted to show is, let's look at a few examples on the 15, right? So we had today the 15-minute orb. You could have just taken the breakdown here. That's a winner, right? We had this one here. If depending on where you're scaling out, you definitely been able to at least get out for break even on this one. Over here, again, another orb, a nice little push down. Over here, we have a loser. So if the lower time frame you go, the more explosive the orb can be, because you're getting in at the peak of the move, right? And in this case, sometimes the first candle will be the high of the day or the low of the day. And in this case, it's the high. So that's, that could be very powerful. All right. So I hope you guys understood what I'm trying to explain here. Essentially, I'm going to recap it real quick. The opening range breakout strategy is taking the opening range, the high and the low of a specific time or specific candle, and then you're taking the breakout in whatever direction of that bar, and you're putting your stop loss on the other side. Okay. And like I said, general rule, you want to be taking targets on the way up or down, 1.5, 2 times your risk. So that way you're always paying yourself and you're not going broke. All right. Thank you very much for spending this time with me. I hope you learned something today. And let me know if you guys want me to do more examples of the orb. I can definitely do another video with a lot more examples, but I don't want this video to run over time. So please comment and like, subscribe, and let me know in the comments below if you want another one. All right. Thank you very much. Enjoy the rest of your day.